Hi, my name is Amanda Fortner, and I will be presenting my analysis on the yield curve for the week of November 4th, 2013 to November 8th, 2013. All right, this is the yield curve from Monday to Friday. The current shape of the yield curve has steepened from the week of November 4th, 2013 to November 8th, 2013. The steepening yield curve typically indicates investors' expectations for rising inflation and stronger economic growth, since improving growth causes the demand for longer-term capital to increase even as the Fed maintains a low-rate policy. Since the yield curve is positive, this indicates that investors require a higher rate of return for taking the added risk of lending money for a longer period of time. This also indicates that investors expect strong future economic growth, higher future inflation, and higher interest rates. Within this week, there was not much change in the yield curve. All right, now this is the forecast from Monday to Friday. The increase in the yield curve rates means higher forecasted one-year rates using the expectation hypothesis. The forecast for interest rates increased over the week. This forecast projects that one-year rates will continue to rise for the next 10 years. All right, now this is the yield curve for Monday. On Monday, November 4, 2013, prices for U.S. Treasuries edged slightly higher on Monday, retaking some of last Friday's losses and keeping yields within recent ranges as investors looked ahead to key data later in the week, as well as information on upcoming Treasury debt sales. Treasury sank on Friday after stronger than expected factory activity data belied views that the economy struggled last month in the face of the federal government shutdown. While the shutdown was expected to drag on the economy, the manufacturing data suggested that damage might have been contained. Data this week could underscore the vulnerability of the economy. Now, from Monday to Tuesday, as you can see that the yield curve increased. There was a little change in the yield curve. The yield curve increased 2 basis points from Monday. U.S. stocks increased between modest gains and losses on Tuesday following 2 days of gains on Wall Street as investors weighed the implications of strong economic data for the path of monetary policy over the next several months. U.S. stocks closed mostly down on Tuesday as lower Eurozone growth forecasts outweighed a better than expected reading on the U.S. services sector. The positive movement in the curve indicates that investors are moving money from equity markets to treasury markets. All right, now on to Tuesday, from Tuesday to Wednesday, as you can see that the yield curve is still increasing. An increased yield curve occurs when long-term yields fall below short-term yields. U.S. stock mostly finished higher on Wednesday, with the Dow Industrials scoring a record closing high. The Dow Jones Industrial average gained 128.66 basis points, topping its prior record, and the S&P 500 also advanced 7.52 basis points. U.S. stocks rose in hope that the Federal Reserve will keep its stimulus measure in place longer than anticipated. By the yield curve increasing, this is telling investors that people are selling long-term securities and buying short-term securities. That explains why the yield curve is steadily increasing. Now from Wednesday to Thursday. From Wednesday to Thursday, U.S. stocks closed with sizable losses on Thursday. As you can see, that the yield curve from Wednesday to Thursday decreased, with strategists pinning the slide on investors taking profit after a strong run that left key benchmark just below records high. The Dow Jones Industrial average fell 152.90 basis points, and the S&P 500 shed 23.34 points, making its largest drop since August 27th. The Dow and S&P 500 rose out of the gate on Thursday and aimed for the first record closes, and then turned negative and closed near their session low. The decrease in the yield curve shows that there is a decrease in the treasury rates, which caused the forecast to also decrease slightly. All right, now from Thursday to Friday, as you can see that the yield curve increased. So it went from Wednesday to Thursday, it was a decrease. Now from Thursday to Friday, it increased drastically. The biggest change in the yield curve happened on Friday. From Thursday to Friday, the yield curve increased, as I said. U.S. Treasury prices fell on Friday after stronger than forecast October job growth revised expectations about how soon the Federal Reserve could start to scale back its bond purchase program and aim at stimulating the economy. The move in the bond market came after the U.S. Labor Department said that the economy added 204,000 non-farm jobs in October, despite a partial government shutdown that was expected to restrain economic growth. The 10-year note yield, which moved inversely to prices, raised 14.5 basis points on the day to trade at 2.75%. Its highest close since mid-September and nearly 25 basis points higher over the past 2 weeks. Now, in conclusion, the yield curve rates have increased throughout this whole week. The main driver of this activity was the stock market. The Fed announced that it will continue to stimulate the economy by purchasing mortgages and longer-term securities. The economy is looking healthier based on what happened 2 weeks prior when the government shut down. So the yield curve continued to increase throughout the entire week, except for from Wednesday to Thursday. But from Thursday to Friday, it recovered and continued to increase. So this is my presentation. Thank you.